So we got our first major surprise of 2026, and it didn't take long, as over the past weekend, U.S. forces infiltrated Venezuela and arrested Venezuelan President Maduro. Now, as you no doubt have seen, there has been a ton of analysis on the mainstream media about what this move means for geopolitics. Is the U.S. going to take Greenland next? Is Mexico or Cuba next? Well, as investors, while all of that is interesting to read, we're really just focused on one singular question. What does this mean for markets? Now, normally in geopolitical surprises, the key to look at from a market standpoint is what does it mean for critical global resources? For instance, oil. Normally, when there's a geopolitical surprise, you are going to see the price of oil rise because investors and markets get nervous that the supply of oil could decrease, which would obviously increase prices and potentially put a headwind on the economy. Well, in the case of Venezuela, it's actually the opposite. You see, under the Maduro regime, Venezuelan oil production really collapsed. They used to produce nearly 3 million barrels of oil per day prior to the current regime. Now they produce less than 1 million. That's over a 60% decline. It's reasonable to expect that if there's a new government in Venezuela, Western oil companies will again be allowed into the country, and oil production from Venezuela, which was a major oil producer, should rise over the coming years. And that's why, despite a lot of the prognostications about what this could mean for geopolitics, the arrest of Maduro is not a big deal for markets.